We're always talking about analyzing the charts, finding things that work. And I want to share with you as I sit here in my office just looking at the gold chart that has been going down for quite a while. I went all the way back and tracked when gold originally crossed over going down on the weekly chart. And we just started adding these lines to our charts. This is the crossover point, the nexus when gold, and if I pull up the weekly chart, you'll see how that works, where gold crossed over on the weekly chart going down. That is the PPO, the price percent oscillator, crossed over all the way back in August, actually the week ending the 12th of August, 2016. Gold crossed over going down. Now, it had previously on the 2-day chart crossed over going down back, a week prior. But we always you have to have a smaller chart crossover before the bigger chart can, unless the whole market crashes or surges up in a crazy way. Rarely happens. So we saw the 2-day chart rotate over, followed a week later by the weekly chart. And then what did the chart do? Well, it does what it always does when it crosses over in one direction or another, particularly on a big chart. It moved down. That moved precipitously down. It had some points where it slid sideways and then dropped and then went up a little and slid off again. But here's what's so curious about this chart. When we go from the weekly to the 2-day chart, I want you to hear what I'm saying. Put this in the bank and use it in the future, okay? 2-day chart rotated over going down, followed by the weekly chart. So we know our weekly trend is down. All things being equal, the market always moves in the direction of what? The largest chart. So we have a downtrending market. Check out what happens. On the 2-day chart, crossed over, okay? We watch the chart as the market slides down some, up some, down some, up some, and it bounds up. And if we start paying attention to the derivative oscillator, remember, the market is in a down mood on the big chart. But we see some up movement, and then whenever we see things really crossing over, going from green, got a little up movement, back to red, do you think you would be okay getting in here on a down move? You're damn right you would. Why? Because if there's enough energy to pull the derivative oscillator down, it's going to work for you. We didn't have it came close to crossing over going up, but did not on the 2-day chart. Regardless if it did, we would not do an up trade. Why? Because our trend on the weekly chart is down. Here's where the magic is, though, the real magic. Look at what happened. The market rebounded in gold, started going up enough to have the 2-day chart crossover going up, along with a derivative oscillator for a few weeks. And then what happened the minute that it started going down strong and crossed over again? Do you think getting in anywhere right around the time that the market crossed over on the 14th of November in gold would have been a bad move? Never. Not at all. Not a bad move, period. You could have gotten in anywhere on the 2-day chart for gold. You could have gotten in anywhere, and if you look at the values, the low was 115.49, the high was 122.31. Look at where gold finally settled out when it came to the 15th of December, down to 107. Do you think you would have made money in an inverse fund in gold? Absolutely. So look for these patterns. Look for and it can be in the converse also. It can be in the complete opposite. If the market was going up, whatever your weekly chart tells you, when your 2-day chart gives you a bump up like this in the wrong direction and then rotates back over, going in the same direction as your big chart, man, you are in a sweet spot. Many times with minimum risk to make a fortune. This is just me sitting around after I've done the podcast looking for clues in the market. I want you to do this too. I want you to take a little time once a week. Grab yourself a glass of wine, a bourbon, whatever your adult beverage may be. Sit back Start drawing trend lines, start drawing intersect lines, and start thinking about the way the market really works and where and when you can find things that nothing's ever going to be a sure thing. But when you can find intersects and lessons that really work. That's why we tell you, if you want to do this, you've got to be in the market every day. You got to watch. You got to participate. You got to listen to our broadcast. But if you'll do that for 10 minutes a day, fill out your daily market worksheet, it is truly the magic that will make all of this click in. And once this starts working for you, your financial worries, your concerns, your problems, this will just be fun for you. It's not gambling, because we do everything we can to minimize the risk. Is it risky? Well, of course it is. That's what makes it fun. That's why we do it. That's what adds to it. But please, follow the markets with us every day. We love to hear from you. Go to chartingwealth.com. If you're not already signed up for our newsletter, do so. Let us hear from you. We'll try to continue to post all the things that we can think of that will help you in your mastery of these charts. Remember, the charts tell you what's really going on. You don't get that from the news. Actual price movement precedes news. So what you need to do is you need to be here with us watching price movement, not worrying about the news so much. God bless. Take care from chartingwealth.com.